Many people do not realize that Social Security is taxable, but with proper planning, you can minimize the impact of taxes on your Social Security benefits. In this video, we will share with you some of the common mistakes people make and how to avoid them. Hi, I'm Mark Singer, founder of Your Retirement Authority, and for over 30 years, president of Safe Harbor Retirement Planning. For up-to-date and timely information on how to maximize your retirement income and Social Security benefits, subscribe to my YouTube channel and hit the notifications bell so that you will be alerted to when we post new videos. One of the first mistakes that people make is assuming when they go down to the Social Security office that they are going to be able to guide you through all of the options and choices and taxations of your Social Security benefits. So what is important to recognize when you do go down to your local Social Security office is what that personnel can and cannot do. They can estimate individual benefits and tell you the amount you're entitled to now. They cannot project future benefits through scenario planning, help with innovative strategies designed to maximize benefits, or to give you advice on how to minimize the impact of taxes. So as we talk about some of the common mistakes people make, this is one of those where you should definitely talk to your advisor or your accountant to make sure that you are making the proper choice when it comes to which strategy, how, and when to get your Social Security benefit. So let's talk about some of the common mistakes people make and how to minimize the impact of taxes on your Social Security benefits. Studies show that almost 1/3 of all people who claim their Social Security benefits do so as soon as they turn 62, which is a big mistake, as we've chronicled in other videos, because you leave a lot of money on the table in future years that will impact your lifetime income for your family. One additional consequence of making that decision, and the mistake that many people make, is that when they do claim at 62, many are still working. And that really becomes a problem in terms of the givebacks or the withholdings that Social Security will take. So let's take a look at this. If you apply for Social Security before full retirement age and you work, $1 in benefits will be withheld for every $2 you earn over $17,640 as indexed in the year 2019. The benefit will be adjusted at full retirement age, so the withholdings that are taken from the check will, on a pro rata basis, start to be given back to you at full retirement age. So it's important to understand that if you're still working, that not only are the benefits going to be taxed, but you're also going to have a withholding. So one of the things to recognize is that your Social Security benefits will probably be taxed depending upon what your provisional income is. For most of the people I work with, most of their Social Security benefits at some level will be taxed, again, depending upon their provisional income. So the provisional income is different than your tax income, if you will. It's your adjusted gross income plus 1/2 of your Social Security benefit plus any tax-exempt interest, if you will, municipal bond income. So as you can see in this chart, that if you are married filing jointly, most people that I talk to anyway will have an income over $44,000, including half of their Social Security and any pensions or interest income or any part-time or earned income that will be over $44,000. And if it is, then 85% of the Social Security income will be exposed to your tax rate. If it's between $32,000 and $44,000, then only 50% of that Social Security benefit will be exposed to your taxes. If you're single, then that number is $25,000 to $34,000, where it'll be a 50% exposure to taxes. And if it's over $34,000 in terms of provisional income, then upwards of, or 85% of your Social Security benefit will be exposed to your taxes. There are certainly so many ways to go with regards to claiming Social Security. There's 567 different claiming strategies. And if after this video you want to learn more, the next video is the 5 costly mistakes people make when claiming Social Security. So if you're interested in that, click on the link below for the description of that video. So let's resume the talking points for today's video, which is Social Security taxable? So let's provide some tips and strategies to help you overcome the impact of taxes on your Social Security benefits. First of all, you can reduce other income with tax-advantaged investments. You can't do it through municipal bonds for this purpose. Certainly, one category of investments, annuities, are available that would also help to defer some income. I'm not sitting here recommending that you buy an annuity. I'm just indicating to you that an annuity in almost any form will help you to defer some income if you didn't want it to be taxed. It's something you'd have to talk about with your advisor or accountant. You can anticipate your IRA required minimum distributions, which may put you in a higher tax bracket, and therefore you might consider drawing down your IRAs before 70 and a half. Now, just so you're aware, you'll have to take out approximately 3.5% of the retirement assets that you have at 70 and a half. So again, when talking to your advisor or tax advisor, you need to be aware of that. You can consider converting traditional IRAs to Roth IRAs. You could delay your Social Security, which would reduce the number of years benefits are subject to tax. You can reduce expenses, pay debt down, adopt a simpler lifestyle. And you can just continue to manage taxes throughout retirement. I think that's a big part of what any advisor should be doing for and with you, is to recognize what your lifestyle is and how to minimize the impact of taxes, because you certainly don't want to pay more taxes than you should. So I want to share with you a story of someone that I've worked with to give you a sense of the impact of proper planning in advance might have on your life and how you go about making the choices that you do. So Bobby was a client of ours many years ago and was thinking of taking her grandkids to Disney. She was working part-time. She was younger than full retirement age, so that makes a difference here. And she was thinking in her part-time job of earning maybe another $7,000 to $8,000 of income in order to fund the trip to Disney. Well, we worked with her accountant, and we understood, because she had hit, unfortunately, the thresholds that she did, that the bottom line was she was going to be paying about 70% of the extra money that she earned, the $7,000 to $8,000, in taxes. So she was really only keeping about $2,000 to $3,000 of the $7,000 to $8,000 that she was earning. So we basically said to Bobby, you're probably better off not to work. So this is just one example of knowing in advance what your goals are and what your resources are, and how to align what you're looking to do with regards to selecting the best Social Security strategy for you, and how to maximize the Social Security benefit for you, and also how to avoid some of the pitfalls that some others have made. If you are confused about any of the 567 different strategies available, and are looking to try to maximize your retirement income and Social Security benefits, and wish to develop your own customized retirement income plan, click on the link below to become my client. Also, if you liked this video, thought it was useful, Subscribe to our YouTube channel. Tell your friends about it. Thank you very much for watching, and here's to enjoying the retirement journey.